In today's fast-moving economy, institutional investors are looking for high-quality, short-duration assets. Trade receivables offer exactly that. But only a few major players have built the infrastructure to invest at scale.
Achieving scale in this trade receivables business requires investment managers to either develop their own proprietary infrastructure, and this is what major private credit firms have been doing over the years, or requires finding the right securitization partner. I think for most structured credit investors, the trade receivables asset class represents definitely an opportunity, but is only one additional asset class next to the many that they are already allocating liquidity to. This is why it is important to avoid the upfront investment required to build a proprietary securitization infrastructure. This is what Tradeteq offers, combining the sourcing from originators with the securitization and managing the whole end-to-end process to keep the cost as low as possible.
So, if trade receivables were such an attractive asset class, why haven't more investors moved in yet? And what's changing now?
So trade finance is a very fragmented play, and there's a lot of technology companies that tackle certain parts of the value chain. The goal is to get an end-to-end infrastructure in place. What we have been doing is we have been focusing on the core bit in the distribution phase. And that includes everything from data ingestion, filtering against investor criteria, all the way to the reconciliation and reporting. But we have also created a securitization infrastructure that allows us to create the physical products. So we are doing about 60 to 70% of the value chain in this end-to-end process. And we partnered up with companies on both sides of the value chain. So investors on the one hand side, but also originators on the other hand side, to bring it all together in an efficient way. Tradeteq has some of the largest financial institutions as customers, including two of them are multi-trillion-dollar funds. Everyone out there is keen to get into the game of accessing working capital, and for that you need technology, and that is the technology that we can provide. Customers come to us because we provide the most comprehensive solution in the market for distribution. And that includes not just the technical side, but also the physical creation of the securitization product that then creates something tangible, investable from an investor perspective.
The demand is growing, and trade receivables are no longer just a financing tool for corporates. They are the next frontier in private credit. And the best part is, early adopters are already moving in. Stay tuned for our next video to find out more.